Hello, everybody. I'm Bonnie Halper. I write the weekly Startup One Step newsletter. I'll put the link in the chat. And every 2 weeks, we host an online investor insights with a different investor each time. I also work with founders on their strategy and their pitch decks and making strategic introductions to partners and or investors where and when appropriate. And I want to thank Joseph Katz for hosting us. Joseph, tell us about you and what you do.
Thank you, Bonnie. Good morning, everyone. I will keep it short so we can get to the meat of today's presentation. I help startups go from unknown to well-known, from traction to scalable growth. Most early stage companies don't lack effort. They lack disciplined systems to grow. I've spent 15 plus years on executive teams aligning marketing and revenue and building acquisition engines that scale. So I'll put my contact information in the chat and excited to hear from everyone.
And Jake, how wonderful to finally have you here with us. So we either have you introduce yourself and tell us about your background, your what you invest in, or we go around the room and have our attendees introduce themselves, and then we just open it up to Q&A. So
Sure,
what would you?
I can just give a brief introduction just so he might even be able to calibrate the room a little bit, and then everybody knows just a little bit about me. And then I would love an introduction around. I can
Oh,
make it very
absolutely.
pointed, and the discussion can kind of lead up to that. But yeah, I'm Jake Crowley. I am right here in Austin, Texas. I run a Series A and Plus fund. We typically are in deep tech, fintech, health tech, and prop tech. I say typically because we're exploring two space opportunities that would potentially be our fifth pillar that we would have. And then outside of the fund, I have begun a fund of funds. So looking and exploring of great general partners around the world, if they are particular great in their partners and who they lead, how their portfolio has been structured. And then one more key marker is they are moving humanity forward. We are all ears of potentially getting LPs and the remainder of the capital behind them. So that's me in a nutshell.
Oh, thank you. So now we'll have people introduce themselves. Brian, take it away. Give us a brief intro. Tell us a little bit about you and what you're up to, briefly.
Yeah, for sure. Um, I come from humble beginnings, and our family also did very well and lost a lot. So I became a behavioral economist since it was all due to behavior. Now I'm starting hackathons and going to other countries with family offices and setting up like geopolitical positioning, where we then start a venture studio, and then it's usually like a multifamily kind of thing. And then that's good for their like other investments in whatever other countries are around that, and that way we can create a ton of jobs and create income for scientists. And so that's primarily what I'm doing. I'm focused on getting hackathons, as a simple way to talk about it, up in as many cities as possible because it has those kinds of outcomes with what we're doing. And now I'll pause there.
Thank you. Eric, take it away.
Okay, I'll be brief. I'm Eric Becker. I'm the founder and CEO of Millimatch. And basically, and within 7 days, Millimatch shows leadership whether execution is starting to break down, how serious it is, where it's happening, and what's driving it, and what to do next. So we have a proprietary tool, patents around this, and it's not black box AI. It's something that we purposefully created. Thank
Thank,
you, Bonnie.
thank you. Vlad, take it away.
Hi, I'm Vlad Kogan, and I'm an angel investor in New York.
I know, and welcome back.
Thank you.
We're always happy to see you, Vlad.
Thank
Tino,
you. I
Yeah,
wish I could do it more often.
I know, I wish you could too. So, Tino.
hi, my name's Tino Go. I was a CFO and I was so frustrated by the experience of buying a custom cabinet that I chose to reinvent the industry. So we've digitized it end to end and created a proximity-based on-demand manufacturing network using other people's idle machines. And we're raising a seed, but we have 800,000 in the pipeline since January. And we have our first enterprise deal pending, like imminent.
And we were there with you at the beginning, Tino.
Oh boy, that was a long time ago, wasn't it?
Yes, it was. Alex, take it away.
Hey, I'm Alex Luca, uh, longtime fan of the Bonnie Show, as I call it. So glad to see you guys this morning. I'm a finance geek and ex-investment banker turned first-time entrepreneur, um, doing an AI native, AI agentic, as you would expect, SaaS B2B enterprise software offering, specifically for specialty lenders, so specialty finance players initially focused in transportation and logistics. Launching this quarter, about to turn revenue positive with our first client coming off beta, and following that with a seed round to kind of help us scale.
Good for you.
Thanks for having us.
iPhone 13, and I know that that's you, Dr. Joe. Do you want to introduce yourself? You're muted and off camera. I guess it's not a good time for him. Scott.
All right, I think I figured it out. Sorry, I had
Oh,
to be on my cell phone. Um,
okay.
yeah, my name's Joe Morielli. I am an orthopedic surgeon out in Denver. I came up with a little idea that I started called Watch One, Do One. We're still in the prototype phase. It's sort of a integrated how-to video site with integrated shopping, basically.
Oh, thank you. I also want to mention that when I broke my thumb, right before I went out to LA Tech Week, I was in so much pain. And guess who was on the next panel? He went to shake my hand and I wouldn't shake hands. And he said, "Can I take a look?" I said, "Only if you're a doctor." And orthopedic surgeon, he hooked me up. By the way, the AIs, the LLMs are wrong about what should have been done. Just a heads up for those of you depending on those for medical treatment. So, Wendy, oh, you're muted and off camera. No? Okay, I think we got everybody who's not muted and off camera, right?
Scott,
Hello,
Scott.
Oh, Wendy. Oh, and Scott, I know.
good
Oh,
afternoon, everybody. I'm Wendy, calling on here from London. My background's in law, but I'm now um, intending to set up a hotel in the Caribbean, an eco hotel in the Caribbean, with a view to it becoming a chain in the region. And I'm intrigued. I'm at the beginning of my journey. And I'm intrigued by the fact that all the in, investor sentiment in London, it's all about tech. And obviously, I'm not tech, I'll be bricks and mortar. So, but nonetheless, I'm sure there's things that I can apply for my venture. So that's why I'm here.
oh, well, welcome. So, Scott, I'm sorry. Scott, tell us about
Oh,
you.
good. I'm suddenly inspired to open a hotel in the Caribbean. That sounds awesome. Let's see. I'm Scott. I am a product leader with a computer vision company. The quick story is we started with models for attention and emotion in the context of ad testing. I joined 3.5 years ago to lead a new platform business. Shortly after joining, we already had a relationship with Meta, building avatars for them. And through that relationship, we had an opportunity to enter their RFI for a face verification model. We won that RFI. Meta's now using us more than 1 billion times a day for some pretty fascinating use cases around account authentication. We used the building blocks we made for them and saw a fascinating opportunity to solve for a need for lightweight identity solutions online. So I've built a system that's pretty novel. It anonymously validates personhood, uniqueness, demographics without having to see an ID. And once you go through it once, you can be seamlessly re-authenticated, just like what Meta's doing. And I'm bringing that to a variety of verticals in a fascinating entrepreneurial journey.
And thank you. So, anybody have questions? I know Ian's not here, and he always has questions. But feel free, guys. What would you like to ask Jake?
Yeah, how do you define deep tech?
How do I define deep tech? For me, it's an understanding, or it is a learning model that is equipped onto the product itself. So the product is most likely going to be agnostic. It is going to be something that it can be an everyday tool, or it could be something that is very heavily software driven. But the deep portion of this is always the learning module, the synthesis of that. Could be an SLM that is now equipped with an LLM on the back end, or it could just be a local deeper portion of the learning, which is I think the portion or is the quintessential port that you need for to be a deep tech platform. But that's for me. So it doesn't have to be a code base that is also modulating on the back end. It could be something very simple, but as long as the deep portion is learning, then that's how I define it.
I have a question.
Okay, go ahead.
Yeah.
Oh, is that appropriate?
Oh, absolutely.
Okay. Jake, this is a question of curiosity, and I've heard some rumblings. So, are you, as an investor and your network, are you all concerned about the quote unquote reckoning coming with OpenAI? How they're not charging much now, but the reckoning will sooner or later they will have to make a profit and therefore increase their token prices. And what that does for a lot of the companies or any companies that are in portfolios that are relying on black box AI that actually created their product. And what's that going to do to them?
Yeah. So, am I worried of the reckoning or do I see it happening? I do see that there is going to be rates that are going to increase. That'll be more of a short term. So that'll be an 18-month endeavor where rates will go a little bit accelerated. And then everything will calibrate the way that normal markets do. So in that 18-month interim, because there is ambiguity or because there is individuals that are reliant on using them within their workflows, that's the reason that you'll see that increase in that delta. But then, like everything, even the simplest of things of data center operations or anything that has to go within those costs, those are continuously being actually looked at and constrained downward. So, do I see it in the short term? Yes, I do. Do I see the market calibrating from there, involving themselves in the competitive landscape from the front end of individuals who actually want to just explore what a wallet share looks like, and they're able to take in the shorts as far as their margins, and also for the decompression of the cost that will happen. So yes, a little, but no, not in the long term.
Thank you.
Sure.
Okay.
On the fintech and the SaaS side, what are you seeing in terms of, companies that you like, both with respect to business model and valuation? And I ask this in the context of there's, the VC private market aspect, which you have a lot of visibility over, but not a lot in the public space. And then you have the public markets, which have seen a massive sell-off in terms of valuation ratios, et cetera, due to AI and the ability to basically create product for zero cost. Although the reckoning could change that.
Yeah. So I am like I said right from the beginning, a Series A fund, also an angel investor, and then all of my exits are to family offices and private equity. And then we actually get ourselves involved with hedge funds on a cost basis level. So I get to kind of see a full landscape of what is going on, what is important to individuals, what's incentivizing, and then also the environment in totality. So with all of that said, from your first question of what do I see or what would I prefer, it's actually all individuals, no matter what level we are getting involved in, if it's the angel side, Series A, or if it is actually getting on a, say we're looking at a primary for a company that is private, but they are allowing us to get on their cap table. Maybe it's via a company or sorry, not a company, but maybe it's an employee that's selling their stock options. So we get to see everything. What always excites me is individuals that live in truth, or what happened 18 months ago, maybe a little bit further, was, the AI boom accelerated everybody and everybody got a little frenzied. So even in capital allocators or enterprise themselves, they saw it as the gold rush. The rush in was in hastiness, and there was decisions that were made on a large scale. They got everybody kind of their hands slapped. So they made the incorrect decisions. So now, when you guys see everybody is now seeing valuations deteriorate, it's because of that. Capital is actually not scarce right now. Capital is conscious, if that makes sense. So it actually, capital is just relying on you to prove it. And that's been my mantra since I began as a venture capitalist. But I always make individuals prove what they do. I have to see it work. And then I also am somebody who can unlock many enterprise or commercial applications, or from a government perspective, or from a family office perspective in different regions. So if you have something that is successful within 5 to 10 customers that you know from a local level, I'm the one that can make that call and get you directly into the door. But you have to have that workflow, or you have to have that product that is going to be able to perform in front of everybody and on that sense. That's the way I structure it. That's the way everybody else is kind of leaning to in the market right now. And that's the way the evaluations will come down, because everybody's not quick to hand it out. If you're with your capital, that's why valuations begin to rise, because people are going to take advantage of that. If you're very hesitant and you're somebody who makes them prove it before you are going to allow for that transaction to take place, that's where you get this a little bit of fall in the valuation. So hopefully that answers all the questions.
Yeah. I mean, are you worried with the current investments in fintech, but broadly in software, that there is no moat effectively with the ability to code for marginal cost, roll out new products for marginal cost? Is there a moat anymore?
Yeah, it's a great question. I enjoy that. That's the big sentiment right now, is this blue ocean is back and everybody can code their way into a product. But that creates, everybody likes to say commoditized fintech applications or commoditized software. That's actually untrue. What it does is it actually allows the elites to have the accessibility to transfer what they have been successful with in a different industry and move it over to a fintech platform, or vice versa. But what you have to do is you have to be somebody who is relational, who has led before, who can get people behind them, who creates great partnerships. Just because you code something that looks okay and you think that it can function well, the market's going to reject it right away. The market is no longer, taking in at enterprise level, saying that, what you are suggesting in this theoretical environment sounds great, but we have to make sure that it is frictionless in our current stack. It comes in, it plays well with our products, because when enterprise brings in your fintech platform, what do they have to do? They have to educate every one of their staff members. They have to educate all of the C-suite, everybody down on your current product. So if it's not frictionless, then it's rejected right away. If it's something that isn't going to show either a time efficiency, which means everybody's time that's a part of the scale is now less, and also it creates that return. So it has to do all three of those. But for everybody that's kind of rushing in, if you have 1 million individuals, for instance, if I said right now, I can't remember how many people we have on the call, but if I said I'm going to give away $100,000 right now, and I'm going to just have one question. The first person who answers it is going to get the $100,000. 60% of the people on the call automatically in their mind, they just think it's not me. I'm not going to be able to answer that. That's just how human behavior works. So when this rushes in for these individuals that are getting their hands on coding for the first time, or they're seeing an unlock, a lot of them, they just want to explore. They just want to make something. It is nice to them, but they get to the point where now it's time for you to actually execute with people who have been doing this for 30 years. You either moving forward with people that are really close to you and that you actually can solve their problem with, or you're going to lose out on the market. So no, I'm not. I'm not at all. I don't believe that there's going to be a commoditized sense. I think that it's going to be just whoever can filter down and actually find the people that really are solving problems and can really scale. That's what our job is as investors. But no, there's going to be no flooding of this.
Thank you.
Jake, I guess I'll jump in. You mentioned the few industries you focus on. What are the key characteristics of investments that you look for within those industries?
There's always three key characteristics. So I had mentioned a good leader before. So it's usually if a founder it has isolated a key problem within the industry, that they are going to be the one to solve it. Usually, they have led a team before, or they've been financed by even an enterprise. So if they worked at Apple or they worked at IBM, those are always great companies that they can stack in their resume. But what did they do while they were at IBM? Were they somebody who was an associate? Were they an analyst? They didn't have individuals underneath them before. Because right now, imagine that you have $1 million in revenue and you're a solo entrepreneur. Well, when that million goes to 25 million, you're going to need individuals behind you. So you've got to know what that is like to lead people. You have to know what it's like to be able to delegate some of those tasks and for them to continue championing you and your mission for the future. So that's a key marker right there, leadership, and also if you've led before. And then if it's somebody who is a little bit before or a little bit pre, they don't have revenue, then were you part of an enterprise where they handed over $1 billion budget to you and you had to make those executive decisions. So you know what it's like to have major capital that you are the individual who's making the decisions for that. So those are two key markers. And then the third one is that always relational or always conversational. So if I'm gonna be the one who unlocks you directly to the board of NVIDIA, or if I unlock you directly into one of the families that is in the Middle East, and they are gonna make you the sole product, you have to be able to sit in front of them. I can pitch the product, I can make those calls, but they're going to be relying on you to continue to execute and move forward. So that's another big one. I always think of my legacy is my company's as well. Everybody looks at a venture capitalist and thinks, well, it's just their brand, it's just them moving forward. Well, it's also that halo wraps itself around those portfolio companies. So you have to kind of represent yourself as in the standard of our company and what we believe. So, leadership, how well you have had capital before, or how much you had to execute within those, and then relations when it comes down to you being able to sit in a room and really profess and really execute as is to storytelling for those initial meetings. And then we get really deep, and then you are able to kind of carry those characteristics along.
And I know Tino has his hand up.
Yeah, thank you. This question is a bit self-serving because I heard a number of words that piqued my interest. So, do you ever invest in marketplaces or that solve fundamental digital transformation types of problems around supply chain and the physical world? Because what we're doing is reducing the supply chain into a two-step process, a desire and a payment and a local machine. And we built that abstraction, that software layer between desire and what the local machine does. A local machine that we don't own. So it's kind of like a P physical assets roll up, but we don't have to own the assets. And then you said family offices, and that is also foreseeably my exit because the we take a third of revenues and we clear 75 more than higher than 75% on our take because all we're doing is receiving cash and door dashing files around. Um, but it's an old line industry. It's cabinetry for crying out loud. But ultimately, the design tool that we're deploying now with our next angel check or with margin is the front end to not only the design of cabinets and countertops, but it's also an e-commerce portal. WYSIWYG manufacturing plus purchase what you drag into the scene is And potentially we could even leverage our patents on the use of AR and VR in that environment, including Gen AI. So from an angel perspective, would that pique your interest? Because that's all I'm raising actually, because I anticipate this cash flowing into perpetuity into unreal fictional goal type of numbers.
Sure. I have not invested in marketplace to date, as an angel or as a fund. There's been some remarkable individuals. I would mention the StockX team. They have really solidified an alumni base, if that makes sense. So normally it happens with every major enterprise. They take off, they accelerate. Employee number 5, 7, 10. They kind of create a nice alumni, and then they try to figure out, okay, now where's our next endeavor? Where are we going for the next one that we're going to be creating and being a part of? So there are some interesting individuals that are doing great things in the marketplace. This one, I always believe that if you have created for yourself a reason for the industry to raise its standard, those are ones that we get behind. Joseph, you had asked about this one, and about key marks or key characteristics of people that we back. That's a very definitive one. Are you somebody who is going to take the market and now make it so everybody else has to continue to follow along with that? So if what you're suggesting is that, then that is of interest to me. And then also, just some of the unit economics. Usually at the marketplace, they're very slim margins. It's very tedious to follow up and to continue on with those logistics. So those are things that I just have to consider, or kind of take a look at. But I'm more than happy to.
Yeah, I would like to send you what we're doing because it's a paradigm shift in supply chain. We whack out 60% of the industry's cost structure, and we take a third of revenues and 70% plus on the margin. Our customers save on average 40% between hard and soft costs, while our manufacturers are north of 70% pre-tax.
All great numbers, all great things I would be interested in. So yes, absolutely. Yeah, like I said, those what you just mentioned right there, those are the four that are normally those are what takes or what it reserves away from marketplace. But would be happy to kind of take a look and just verify that everything is in truth.
Hmm.
I want to, as somebody who works with founders and on their pitch decks and their strategies, thank you, Jake, and thank you, Tino, because I always, everybody tells their story and this and that, but investors want to see numbers, real numbers, that you have traction, that you have product market fit, that you have market traction. Right, Jake? That's very, very important to you. Of course it is.
And Eric Chen is one of our stakeholders.
Who is?
Eric.
Oh, Eric.
Hey, how are you?
Oh, Eric, I didn't see you come in. Then welcome. Eric, introduce yourself. And Marie Patterson.
Oh, I just walked in accidentally.
Oh,
Hi,
we'd
I'm
love
Eric
that.
Chan. I'm president of Echo Design, and I have a innovation company doing product innovation, go to market, test market, and I also a new angel, and I advising different company, coaching, and also investing in different deep. Thank you. Nice to meet everyone.
Yes, and Eric and I are buddies as well. Marie Patterson, I wanted to give you a chance to introduce yourself. I know you came in late, so tell us about you, and you're muted at the moment.
Hi, good morning, everyone. I'm Marie Patterson. I'm a VC. The thesis for my fund, Infinity Path Ventures, is investing in seed stage startups that are building AI infrastructure and quantum technology. And to that end, I have several startups in my fund's pipeline that have solved the energy problem as it relates to data centers. And they are going to be upgrading the internet to handle AI workloads and upgrading all of our computers to handle AI workloads. And I'm currently building out an ecosystem of data centers and capital partners that can fund data center projects. And I am bringing these startups to these data centers to get them contracts. So
No,
yeah,
we have
that's what I'm
we have
doing.
to talk, Marie, offline, of course.
Yeah.
So, I want to mention something because maybe AI is, maybe the investors are cooling down a little bit of being a little more circumspect. And yet a friend of mine and one of my newsletter readers was telling me yesterday that he's now working, he just got a job with a company. They're blockchain based, it's payments, it's nothing new. And they're only doing a wrapper. And they got 20 million. Back of the napkin. Back of the napkin. It's blockchain based, but it's literally back of the napkin, not one line of code written. What do you have to say to that, Jake? I mean, I don't under, he's a very, very charismatic founder. I will say that.
Yeah, charisma will take everybody to a sense. I mean, there are individuals out there, particularly in the Bay or particularly in Dubai, Singapore, they're still writing some early checks and they're still writing some hefty checks. I think that there's going to be much less than that. I really believe and see that like everybody was suggesting, or I can even verify to you, the capital markets are starting to take heavy antennas of those particular individuals and being able to validate them. Now, they slip by. I don't really see too many of them. I think that all VCs, they have a real notion that 60% of VCs fail. So those are typically the people that fund individuals like you had just mentioned. But yeah, I just see it being less and less. But from everything that I kind of get involved with, or the individual capital groups, those are the people that they will basket. They will have a 10 to 15, almost like an angel side. I was just meeting with Katie, who's a partner at E16. It's still valid that there are some risk out there for larger groups like that. But no, typically that is not someone who just has a wrapper. Wrappers have completely been faded into the abyss. But that's just my take.
Oh, did I mention that their pre-seed was 20 million?
Yeah, that's incredible.
They're
Yeah,
unbelievable. But
that's
anyway,
incredible.
I thought I was floored. I was gobsmacked. Does anybody else have a question or a comment?
I have a comment.
Sure.
So along the lines of what we're talking about in terms of blockchain, one of the startups in my fund's pipeline is poised to get a $4 trillion contract with the US government for blockchain to be deployed across data centers.
That's
That's
outstanding.
that's always quite impressive. Love to hear about that one. Yeah, so
Me
I don't
too.
know if you had kind of heard Marie, but so not outside of just the Series A fund that we run here, I actually do get a lot of individuals that kind of send me a lot of their major projects. That includes the land around the US, when people take senior position of the land, when it is going into development, when the data center is actually functioning and actually supplying for the CapEx of the data center. And been presented, it's interesting you had mentioned quantum, been presented two major quantum opportunities that would do exactly that. They would take it so that chip usage and for the costs that we have been talking about from the beginning are dramatically going to dwindle. But it always comes with the budget itself. So you had mentioned the government side right there. There's two sides of trying to go to market in quantum. If it is mentioned as quantum, that budget's about 10%. But if you suggest that you're an optimization, that budget is much larger. But just a little fruit for thought if you have founders that are trying to procure those budgets.
Yeah, you
Yeah.
should talk to Maria. I know the company she's talking about.
Love to.
Yes. Anybody else? Are you investing in data centers? Everybody's building them now. I mean, it's unbelievable the deals I get on a daily basis.
Yes,
Yeah, Bonnie. So
because
that's outside of the fund. So with the family offices that we have, typically every family office has about two to three large scale projects. So just having a bench of, say 300 to 400 of those family offices, that's where you keep hearing these major projects, and then we'll just invest alongside together of a data center or of a major infrastructure project, or there's a lot of property that's in the Middle East right now. It's going from leasehold to freehold, and th those are ones that if you're strategically placed in there, they can be quite a long-term hold. But yeah.
Oh, good to know. I might have something for you. Maria, I interrupted you and I apologize. You have the floor.
No. I was just gonna say, Jake, it'd be great to circle up with you. We're working with some interesting data center providers that are driving extreme efficiency. What we've seen is that the smaller data centers are actually more profitable than the larger ones. And we're looking at a company that is building out micro data centers, and they have a 1 megawatt capacity on a 40-foot container that's packed out with GPUs, like about 834 GPUs. And this is something that can turn, let's say, underperforming commercial property into a yield-bearing asset.
Yes.
Um,
Would love to. Love to speak. Yep. So we have one active right now, looking at a 300, so they have 300 million in allocation of any land that's available right now in the US. And then just because this is near and dear to me, there's a group out there that has 1 billion right now, and they're looking for a data center or they actually do complete manufacturing, but they're trying to spur job growth back into the US right now. So would be heavily of interest to hear from anything.
I'll put
Can
my
you talk
contact
about
information.
as an angel investor, what do you look for? What sectors? What sort of check size structures? Safe priced equity, etc.
That was my question too. Thank you, Alec.
Yeah, so from the angel side, typically I'm writing, I could write down to 50,000. I normally don't write those small, but up to let's just say 5 million from the angel perspective. But now who am I looking at? Just because the fund normally typically picks up right after that. So tech is still a major focus of mine. I think it enables everything that we do in life. It enables everybody to kind of move down Maslow's hierarchy. So I'm always looking at individuals who are producing in that fashion. But then the other ones, if it is a if it has to do with detection in the bio side, I would be heavily interested in, and this is just strictly from my angel perspective. And then if it has to do with uh, alternating or regenerative side for your cell base or for anything that has been currently in your chemical imbalance. So I say those specifically because normally I would just say biomed and individuals that know kind of what that is. But if it is in detection, meaning anything to do with your bloodstream or within detection of potential catastrophe enter to your body, I am all ears as far as it comes to angel checks. But yes, still within that deep tech, fintech, those are ones that if it is going to be early on that wouldn't normally typically be in the fund, I'll take a look at. But then really anything that is going to be groundbreaking outside of that from an agnostic perspective, if it's somebody who has really done and seen and been a part of great companies before, and they now are just want to do it by themselves in completely agnostic terms of what they're actually building. I would be all ears as well.
Oh, wow, so you're actually investing in biotech?
Correct. From
Oh,
from an angel perspective, not
right.
not from Crowley Capital, but from Jake Crowley.
That's good to know because it's rare to find an investor who'll do that. Do you have any sort of science background? I'm just curious. Or you,
No, so well, I would say I'm always a curious learner, but no, the reason I invest in biomed and take a look at these is because a few of my family members were afflicted, but and well, I would say two senses of that. I think that my story is not unique. My family has gone through things like this, but all across the world. So if there's ever a sense for instance, we're looking at a company in Nova Scotia that is completing protein basis to go into a food sense that can actually not rely on either overfishing or endangering population. We could complete ourselves, and then the fibers can directly be utilized for enhanced versions of plastics, so we can actually use plastics the way that they were intended, not actually incapacitate ourselves from a biomedical side. But so that just gives you a sense. But the only reason I say that is because I truly believe that we should be better stewards of what we consume and what we put in our body.
Oh, I'm with you 100%. Next, oh, Scott.
Hi, mine's a different angle of questioning, I suppose. I'm curious, I saw you went to school in Michigan. Are you from Michigan? I'm from East Grand Rapids. And second question, I'm curious, in your role, the work you're doing, having worked on AI in the past, having read your bio, et cetera, is it relevant for you to like get your hands dirty? Like on this call, I'm in Claude Code, co-work, et cetera. Like, are you doing that in your work to potentially be close to it, or is it solving problems for you that you would have solved differently? I'm just curious if that's like relevant to how you operate.
Sure. Great two questions. One, you're an hour away from where I grew up in Mount Pleasant, Michigan. That's where I'm from originally. And then I lived on both coasts and now settled here in Austin, Texas. And then I also uh, regularly in a house back here in Monaco. But so uh, I love the Midwest grit that is formed. And then that always kind of carries through in character. So I appreciate that you're from East Grand Rapids. But second thing is, yes, I believe strongly. I don't know if you've kind of read about Alexander the Great, and I'm not going to say that I am Alexander, but I believe strongly that you have to do alongside every individual or staff member or team or group or portfolio company, you have to be able to get into the weeds with them. So yes, I actually write customized software. And normally that's actually what we do a majority of with our portfolio companies, and then also how I evaluate. So my diligence is strictly much different than a normal VC. I can actually outline and figure out from an EQVista similar of doing it directly with them. But yeah, so I am somebody who is very hesitant on the Claude side. Myself and another individual here in Austin, we regularly talk about the maintenance program behind it. But I always like to explore new options and new ways of involving ourselves within the code base. But to answer your question, yes, absolutely.
Awesome. Yeah, the Midwestern heart of gold, man. You spoke to that.
Yes, that's right. That's right. I saw somebody in the chat just put from it looks like Detroit, but
It's me. I grew up and to Detroit in '69 and left high school in Bloomfield Hills.
Oh, wow.
but
I was a dirty air kid. I used to spend my summers in Southfield.
look at this. We got everybody in Michigan here
Yeah, geez,
on the call.
I lived in Rochester Hills for a while.
Oh
So
my goodness.
I
We're
went
just
to
having a
Pueblo in Bloomfield Hill.
I'm just trying to
no
wrap my
way.
head around. I'm just trying to wrap my
Yeah,
head around.
Bloomfield Hills, incredible place. So you said 69, so just after the catastrophe of the mass exodus of Detroit. So I think it was 67, if I'm correct, of the riots, and then
Yep.
I think it went from what was it, 4.8 million people that were in there, which is a big number for Detroit, all the way down to I think it was just over a million. But if you haven't been back lately, Gilbert and the Illich companies, they've really re-solidified that downtown area. The arenas moved back in, and
Mhm.
everything kind of proliferated out from there. It is strongly coming back as a city.
Yeah.
Yeah, I've spoken with Dan Gilbert's one of his investors at Detroit Venture, and the conversation was around he's got 32 million square feet of commercial space going into the
Wow.
Cleveland shoreline,
Yep.
and so if he were an investor in my company, he'd recover the investment in savings and while pumping up the value of his stock, because yeah, it's a fundamental change in how
Well,
custom case work is done.
Rocket was a early investor or majority investor in StockX, one of the major marketplaces that became first. So yeah, I would uh, that would be quite the connection. But yeah, interesting that we have so many Michiganders in here.
Well, I was only there for the summer. Dirty haircut, like I said. Although I know
Yeah,
Southfield is
yeah,
hardly downtown.
No, it's not.
I
Especially
know.
now.
Could I ask a kind of a silly question, maybe,
sure,
back things up a little bit? I'm
sure.
kind of new to this, so I'm a bit of a neophyte. I don't have a big investment background or even being the best necessarily starter of a company. But when when would be the best time to look towards raising capital that will put you in the best position to potentially get it?
That's a great question. I actually spent a lot of time talking about just this. The best time to raise is after you have executed and you have shown that you are the true leader and you know what the ecosystem is involving in every aspect. So if you have really even if you're coming from a pre-seed or seed standpoint and you either one know the pain point yourself because you are someone who lived it, smelled it, felt it, every bit of it, or two, you were just involved so critically that you were actually solving for yourself. That's a big one. And then after you have brought somebody on, or maybe it's you yourself, but you have the financial and the fundamentals of the financial story that you're able to display all the way up into an investor banker level. That's what I would say. So make sure that it's very apparent that you know every single one of your competitors, you know the exact landscape of what you're introducing, and you know the key individuals that can maneuver you. So it's not when you're in that room with an investor and they're asking you pointed questions, you either don't know the answer or you're just not equipped to be in that space. So you better know the ecosystem, you better know your competitors, you better know exact individuals that unlock from the procurement side. So who's actually going to be giving you contracts? Do you have a relationship with them? Do you know well that they are that the timeline? When I'm in an investor call and I'm listening to a pitch for the first time, and I'm hearing you say, "Well, now we have to do a little bit of R&D. Now we have to go hire a CFO." My mind and the way that all investors' mind work is now I get to see a timeline. I get to look at you and go, "Okay, that's 18 months, that's 24 months, that's 30." Nope, not interested. But if you have all of those buttoned up where there's no time lag. The amount of capital that I'm putting behind you has a direct return. It's very identifiable, and I know the next stage or I know the next exit. That's when I would come to the table. And then for the financial perspective, the fundamentals have to be crystal clear. You have to know exactly what's on the sheet. You have to know exactly what's on your summary. All of it is nice and laid out so that there's no questions after the meeting. It's just when do we get started? That's when I would say it is best to raise capital. But a lot of individuals, they also, when they raise capital, do it the wrong way. Where if it's my first time raising capital and I am going to go out to investors in general, you're going to waste time because you're going to look at a VC like me and you're going to talk to me and I'm not even in your space. Or you're going to talk to a family office. Maybe you had Bonnie as a great super connector and she allowed you to talk to one of her family offices. But the family office that you're talking to does not invest in yours. So it's again a waste of time. So two things: make sure that you know all the ecosystem. You have identified your financials down in the fundamentals, and then you go out and you find your ICP of your investors now. So you're figuring out exactly who would be interested in you. Have they invested in companies like you before? And are they going to take that call very seriously? So now you've done everything you can to be as raise ready as possible. And then you identified who actually would write a check to you. And now you have a very pointed discussion.
Awesome. Thank you.
I have a comment. So you seem to be very hands-on with your portfolio companies. When they're raising the next round, do you help them with that as well? Some investors do, some investors don't.
Well, mine's a little different. Like I said, so my exits are pretty. I'm kind of a reverse VC model.
Oh,
I've already identified who your next raise is and who's going to take it on. So yes, I mean for me, it's going to be very simple. But if I didn't have those people, like when I was first getting started with the fund, Yes, I would be right there. I would be telling the story and alongside of them, and allowing for them to continue to blossom because, I also have skin in the game. But yes, I'm very hands-on in the technical sense, but also when it comes to that raise side, I'm right along there in the meetings.
I had a feeling. Anyway, next question or comment? I know we have somebody coming in late, but I'll hold on a second. Anybody? So, Jake, any other wisdom you want to share with the cards? What do you look at in a pitch deck, seriously? Because, as I say, I work with founders all the time and they put everything in.
Yeah, so the pitch deck should be either 7 to 9 slides. It should never have fluff. It should be very curated to answer four major questions. Okay, so what is your differentiator, or how are you the individual who can keenly bring a new system and can keenly dissolve all pain points that you're going to discuss? So, how are you differentiator? And then number two, what is your current metric? Or sorry, part of that differentiator is please place in all the revenue metrics, if EBITDA measures, anything that can showcase that you are a differentiator. Number two, what is your direct ask? So it has to be in there. If it's 500K, if it's 15 million. Number three, what is your use of funds? Always from a venture, if it's a venture capitalist you're talking to, make sure that 51% or more is being allocated to sales and marketing, revenue drivers. So top line and then bottom line. From a VC's perspective, they always want to see it. If I'm looking on your sheet and showcasing, well, we're still looking at hires, we're still looking at R&D, and a lot of it is going to simple operations, and it doesn't even tip over that 51% that you're not isolated and completely focused on driving some of those sales, it's gonna be a mark off. So that's number three. And number four, let me know what you believe the next stage is. It doesn't mean the next stage, we think we're gonna go to IPO or we're thinking there's gonna be a strategic purchase. It just means for that investor that's sitting on the other side, what is their exit? What is in it for them? In the pitch deck, you have to realize that you are no longer pitching to your customers. You're no longer pitching to people that are trying to purchase cabinets. You're pitching to somebody who sees cabinets in a marketplace as an asset. So I'm looking at you in this cabinets and I'm thinking, okay, if I put 3 million in, what is my return going to be on that? So that's the mindset of the pitch deck. You're now talking to somebody who is looking at you as an asset and you have to fuel their need to come forward and have an emotional connection with you and then have a reason for them to say, this is the individual I've been waiting for to be in front of me, and I'm happy to give them capital behind that. So, yeah, that's in a pitch deck. That's what you're trying to deliver. All of the other information, all the other technical things that we're going to get through in call two and three, they should probably be completely out of the slides. Obviously, if you have somebody a part of your company that is a highlight or a part of an industry or has been in the industry for a long time, or maybe it's a billionaire, I would definitely mention that. I'll always mention strategic individuals that can move the needle, but everything else is irrelevant at that point in time. Honestly, Bonnie, I don't even usually take a pitch deck on my first call. I'll just say, get rid of the pitch deck. I want to know from you. I want to hear about you. I want to hear if you're somebody who can withhold themselves in a basic 30-minute call. If you can, then we can move forward. But there's a lot of individuals out there. When you send over a pitch deck or you're about to display a pitch deck, they're skimming through all of the technical jargon. They're skimming through all of the information pieces that you believe are relevant to your customers, and they're just looking at, okay, what are they simplifying? How are they solving it? What are they asking for? Are they showing that they understand what they're talking about, and are they showing that I can get a return from that? So that's me.
I'm going to remind everybody that investors are all about exits. You want exits, so you can move on to the next project. Joseph.
Yeah, I was just going to build on something, Jake, that you said. You talked about the ICP of the investor, which is a marketing approach to finding investors, and then you just talked about, who the business owner is talking to, and you're selling to the fund, to the person who's potentially going to give you money. So you're selling to a different audience. So it's a marketing campaign to find money, essentially, is what you're describing. And I just want to make sure I heard. Did you say 15% of the funds raised should be going towards marketing? Is that what you said in your
51.
51? I wasn't sure if I heard 51 or what. All right. So yeah,
it should be a majority.
Right. You want
if you're talking to a
fuel
venture
on the fire.
capitalist. Yep.
Fuel on the fire. Yeah.
Yep. Yeah, by the way, that's a good way to put it, because I just want to make sure that if you have a flame and I'm putting fuel on the fire and the objective is for the forest to set ablaze, we better make sure that in your pitch deck, you're telling me that there's going to be timber leading to the remainder of the forest, and then the forest is going to catch on fire. If you're telling me in the pitch deck that I'm going to add fuel to your fire and it's going to go straight vertical and then it's going to fizzle out, I'm not interested. But if my fuel is going to go and be utilized and routed the right ways, then yes, I'm interested.
One of the first startups I worked with, part of the executive team, sitting in a board meeting, the angel investor asked, if I gave you $1 million, how would you use it to grow the business? So it was a great question. It stuck with me, 15 plus years later. That's essentially what you're looking for, right? If I give you $1 million, how are you going to double, triple, quadruple the money?
That's right. That's exactly right. Yep.
So we have a late arrival. It's Angela Scarlett, and I'm going to give her an opportunity to introduce herself. Angela, you're muted.
Yeah, I'm looking for my mute button. Sorry about that. Hi, my name is Angela Scarlett. I'm from Toronto. I am the legal mentor for the University of Toronto Entrepreneurship Program, and I'm pleased to be here.
Great to meet you, Angela.
And of course, she works with a lot of founders, including one who's a biotech startup, which he does invest in, Angela. I'll tell you later. So, any other questions? We're going to let Jake go early? Jake.
I'll throw another one out there. I mean, you were talking about AI a few minutes ago. What are you seeing that's interesting I worked in the prop tech industry for a little while, so I'm curious. What are you seeing in the prop tech industry or the fintech industry, which I also worked in, that's making you just take a second or third look at a business as it relates to their use of AI?
As it's used to AI, I'll tell you one thing that I hope everybody really takes home with them is data is finally becoming a sellable asset, similar to individuals that are recording artists and then they have an album release, and that is a asset now that they own for their IP. Your data is going to be there. So I've been saying it for 5 years myself. I've been hearing it for 15 years. Data is the new oil. And now it really has become a requisite of individuals that are going to utilize it, and then create those learning models. I'd mentioned the SLM before and the LLM. So the SLM is now a small language model that you're accumulating around a few of your customers. Now, you are going to accumulate identified native knowledge that is now going to be sellable to an NVIDIA or to an IBM or to a OpenAI. I would strongly approach that in a very serious sense. So companies, no matter if they're fintech or no matter if they're prop tech or no matter if they're in deep tech, who are really defining what it is like to place those sensors around their key customers and accumulate that data and then use in their SLM. Now they're accumulating, their LLM is now tying it back and they're learning in a great method, but containerizing it local to each one of those. Those companies are really defining or will be defining industries. And what is the approach of the larger enterprises is going to go out and be to purchase those and bring those into the larger complex. But that's what really excites me is companies that have those already in place. I don't even have to see that you are accumulating data that is going to be structured right now, because I can do that for a lot of companies, and we can best synthesize it for them. But yeah, as long as everybody now has a sensor at the key points that you do need to detect it, that is very interesting to me. And I think if there's one key takeaway, I would say with all of your companies and all your founders, begin to accumulate data in SLM and be able to create IP around the data that you have and be able to utilize that later.
Oh, thank you. Anybody else?
What's your view in terms of data and in the fintech sense? What's your view of software companies, fintech companies that use their data to generate a marketplace, lending marketplace?
Yeah, I mean that's exactly what we should be doing, right? So we talked about the IoT, the IoT within a fintech platform based off of user data, that's really what everybody's gonna kind of continue to be moving towards. Simple example is, hey, you are about to walk into a Capital Grill, your bank account can't support that for the next 2 weeks. Maybe we need to start scaling that back to I can't a Ruth's Chris or somewhere a little bit further down. Not only can you not go to the Capitol Grill, but you shouldn't be ordering the triple stack burger because based off of your biomarkers, we're looking at you still need to continue to monitor that. And by the way, 2 miles away is a fitness center after where you guys eat. You should start thinking. So that key metric, that's where everything's going with the IoT, but it's also based off, how much accumulation, I'm wearing this that can transfer back into easily digestible models. But yeah, so to me, yeah, absolutely within the fintech space as well, all the data accumulation.
Awesome. Thank you.
No, my husband used to work for IBM, and we used to go to the Capitol Grill all the time. I miss that place. I really do. Thank you for mentioning it. Forgot all
Yeah.
about it. So, do you spend a lot of time in Washington? I know you work with governments I'm sorry, with startups that are looking for government contracts. So,
Yeah, fortunately, we can actually complete everything right here. So not too much time in DC. And then I always kind of route everything through Ashton there locally. But yeah, so not too much time in DC. Going to be there for the presence of Station DC, but not too much.
so what sort of technology do you look for in that vertical?
Within the government sense,
Yes.
it's always a dual use.
Okay.
So somebody who has had commercial traction and now can maneuver it over, or vice versa, if they've already had the DOE, or sorry, DOW now. Anybody who's into commerce or anything like this, that really hasn't even considered that this has a commercial viability. Alex with Palantir kind of showcased that is possible a few years ago. So companies like that, they just haven't met the right individual to unlock it. So me and another VC here, he does it for the commercial to government. I do it from the government to commercial.
Okay. Thank you. So, next question from the audience. No? Oh, Jake, we might let you go early.
No problem.
I hate that. I always love to hear what the investor has to say that nobody has asked about. So if there's any wisdom you want to impart, we're listening.
Oh, geez, a little bit more wisdom. I would honestly say, I said it before, but 2025 was more a risk on. 2026 and beyond will be, what can you solidify? What can you express about the contracts or relationships that you do have? My sole focus as a founder would be really to solve the most basic of pain point for one or two customers, to really make it so that they don't see themselves going anywhere else. And that I would give away as much as I can to them. And then once I was able to do that with one or two, that's when you begin to kind of promote yourself to like companies or like enterprises. So my core focus, if I was beginning or if I was a founder who is has a product and is going to market with that product, always focus on one or two, always trying to solidify those people that are going to open doors for those one or two. And then be able to kind of have a growth metric from there. So that's what all 2026 is going to be about is who are those individuals who are willing to take a not a risk, but a really solidified stance in you, and then how well can you serve them? And you would be surprised when you only have the mantra of I just want to serve you and I want to make your life and capacity much easier, how well that's going to have ramifications for the remainder of your product and for your life. But yeah, that's what I would leave you with wisdom.
Okay. And I wrote my last newsletter was about P&L, the bottom line. And for example, BuzzFeed is going to be delisted soon, if they haven't been already at this point. And we see all these crazy, borrowing from Peter to pay Paul especially with OpenAI. I mean, it's the same thing. That's got to blow up because they're not going to make the kind of revenue that it'll take to maintain the company and continue to grow unless they keep doing these crazy deals or taking in all this money. Where's the bottom line? Where's the balance sheet? Do you see anything there? Does that raise red flags for you?
Of course it does. I mean, we see the immense contracts moving back and forth from enterprise to enterprise, being
Right.
backed by not demand source, which is alarming. But where's the bottom line? I think that there is going to be a tectonic shift in what we are able to create as all other companies and as all other enterprises. So it won't be the normal or typical 10 that you think of in an industry. The bottom line will actually be who is able to give you mentioned fintech before, who is able to have families rely on a non salaried position. So no longer are individuals going to rely on I have to be a part of a company and the salary is given to me. What you'll see is you will be part of say it's a hedge fund or say it's a part of a cost basis that you will best be able to bring into your family, make decisions off of that. And now your salary is basically tied to your creativity and your agency as an individual. So the bottom line of all these major companies is, we want to keep transferring all of this large scale capital back and forth, so that we can now kind of create a giga system or giga economy where everybody can have small little nodes that they can place their finances behind. Those finances then bring their salary to them, and now that everybody can create what they were really meant to do in life. But that's where I think everything's going. That's going to be a 5 to 10 year outlook. But that's what I believe is going on in the world, where you see all of these major contracts and major advancements going.
Okay, thank you.
Can I
Thank you
have
so
one
much.
final thing? Because
Absolutely.
just out of curiosity, because it's always interesting at the end when no one has questions. So I'm going to put you on the spot. What's the question that no one's thinking about right now? What is it that we don't? What is it that no one's thinking about with investing in or getting investors?
So what's everybody not thinking about from an investment standpoint, or what investors?
Either one. We're all sitting here and kind of wondering, and I guarantee that none of us have all the answers. So, what are we missing? What are we not thinking about? So,
Yeah, so just
Yeah,
putting you on the spot, you have to have the answers.
yeah, no, that's a good question. The what everybody is missing or everybody's not asking about is what makes an investor or what makes investors in this current landscape excited, or what makes an investor happy to do business. So everybody's always asking, well, you guys have to be thinking about returns always, right? Or you guys always have to be thinking about what is moving the needle for your life in every all of these major rooms. What they're not asking or what they should be thinking about is why would Jake Crowley be interested in this bio firm, or why would Jake actually be thinking about fintech in his portfolio? I would strongly suggest doing a little background on the people or the investors of what makes them incentivized to actually start deploying. The reason I get involved is not always because of I just looking at a return profile. I'm also looking at what kind of cascading effects that's going to have for people and what they come across. So, what are people not asking? What is a human level trait that investors love? And that is very important. When you first walk up to somebody and you're at an event or you're at a pitch meeting, I would start to ask about them in a general sense. All of my family offices, all of my major private equity groups, they like me because we get to talk about fashion and about art and about boating. We talk about things that are outside of just capital. All venture capitalists, of course, we want to know returns. Of course, we don't have a lot of time. But when it comes to getting to know people, it's always what is that human connection? So what are people not asking? It's how can I have a human connection with somebody before we start doing business?
Awesome. Thank you.
That's true. When I was at a Jesse Capital event, and I mean, founders especially tend to be extremely transactional. And there was somebody coming in late, and I had to point him the direction to go in. And I said, "So what do you do?" And he started telling his card was a philanthropy he does, and he's also an investor. He's got a fund. And I said, "Tell me about the philanthropy." He said, "Nobody." I said, what inspired you to do this?" And he told me his life story, which was fascinating. He said, "You're the first person who's ever asked me that question." Because people tend to be transactional. Don't be transactional. Get to know who you're talking to. Remember, it's a long-term relationship, or potentially can be. You want to know who you're getting, as we say, into bed with. Just as investors want to know. That's why they're asking you so many questions. So thank you for that.
What's your favorite artist as a art person and perhaps as an art investor?
Oh, that's a good. Now that's a really good question. So Gaudi is my favorite. And I think that it's only because I'm an individual who thinks a very long term. And Gaudi is probably one of my favorites who has ever thought in a extensively long term over eras. And then also as somebody who is very ahead of his time. I'm not sure if you've been to Barcelona and been able to experience some of these museums.
Yeah.
So it's gorgeous in its aesthetics and it's gorgeous in its history and then what it tells for a story. So Gaudi by far is my favorite, and I love all of what we can interpret from where what he had put out for in that century for him to even consider some of the arts that he had was able to forecast for is outstanding. But yeah, by far him. Good question.
Are you going to Barcelona on your travels?
I will be. So they actually do a Unlock VC in Europe, and last year they hosted it in Paris, and this year they will host it in Barcelona. It is actually 400 female VCs, and they'll have individuals that are good, strong supporters like myself that are also will be in attendance. But that will bring me to Barcelona, and of course I will stop by and see a few of the museums.
Good for you. When I'm in Paris, I like to go see Rodin, what's that? Rilke's house. You've been there, right? The gardens?
Yes.
They're beautiful. So
Those
thank you.
are gorgeous. The
Yeah.
gardens it's a great place to
Amazing.
have lunch.
Yes. And thank you for bringing that to mind. So thank you so much. Unless anybody has one last comment, or if you have one last comment, and I won't ask you what's your favorite color. But thank you, everybody, and we'll see you in 2 weeks.
Thanks, everybody. Really a true pleasure.
Thank you so much.
Bonnie. Thank you.
Thank you, Bonnie.
Joseph
I
and
wanted to
Craig.
ask Jake, do you want to share your contact information in the chat so people can get in touch with you, or I can share it with them?